This class is going to focus on false breakouts. False breakouts work because you know that a lot of traders are in a certain position. Let's just say if the previous day's low, for example, this red line gets broken, a lot of traders are short. When it comes back above into the previous day's range, you know traders that bought that breakout are losing money, and a lot of times that leads to pretty violently large counter trends. And in some cases like this, if you have a false breakout and it's kind of going sideways right here and it breaks out or even goes above this bar's high right here, you would go long. And initially you want to put your stop underneath the low, but as it goes sideways and you see there's no statistical strength, you probably want to move it up right underneath the previous day's low. So in this case you might lose 5 or 6 pips on there. And it comes down, and again it can't break that low, so when it breaks out here you go long. And you can see it came back to the previous or the hourly moving average, which is a major resistance area, and again it wasn't that strong. So you take a small 10-15 pip profit there. And later in the day you can see it also has a false breakout right here and immediately comes back above the high of that false breakout. You go long, and this one leads to a huge move. Now most of the time price, when it has a false breakout, has a violent move, usually within 30 minutes to 2 hours. This one went sideways for many hours and probably was based on some kind of news event that caused that move. Let's look at some other examples. Euro yen, it breaks out from above to below the previous day's low. Also happens to be the previous month's high and a 10-day moving average here. So there's a lot of support areas here. And so when it breaks down underneath there, it should cause a big trend to the downside if traders are really piling into shorts or traders that have bought that support area expecting reversal, stops getting hit, and it didn't go down that much. That's one of the keys of a false breakout. If it goes down, ideally I like 10 to 15 pips, but I'd say I'm up to 25 pips, and in this case it went down less than 25 pips and went sideways. When it comes back above the previous day's high, previous day's low, or any other support area near the lows, you have a false breakout, and you can see the rest of the day's trend was up. One of the keys to support and resistance is once a support area is broken, it becomes resistance. Once a resistance area is broken, it tends to become support. So when you see a breakout above or below and then you have a retest like that, it's very high probability. And you can see another retest right here. There was a little bit of weakness for about 1 5-minute bar, and then the weakness disappeared. And when it broke out right here, you can see an explosive trend to the upside. Here's one where the daily, weekly, monthly trend's down, comes to upper containment band, really can't get above it. It's also one of my Fibonacci profit target levels that I create every night for the next day's trading. And so this is what I thought the maximum high would be, and it went a few pips above that. Sometimes false breakouts don't happen immediately. This one went up about 40 or 45 pips above it, and later on came down and found support, which oftentimes and most of the time happens. And when a support area, when you have a strong trend and breakout that was successful and it comes down to that support part later and you don't get a bounce off of it, usually when it breaks underneath there, the false breakout happens many hours later, and traders that had bought the support area are long, and so when it goes down they're losing money, and you know that their stops are going to get hit. And it frequently causes a nice strong trend in the opposite direction. So this isn't exactly the same type of immediate false breakout I went over before, but previous days, weeks, and months high and low, even if it takes 5 to 8 hours, when they fail to stay above that area, you also get some big trends. Same exact thing happened here. The previous day's high got hit, broke out, and continued trending up, hit my Fibonacci retracement level and profit target level, and later in the day you can see it came down to that support area, and when it broke down from there, it went down about 15 pips, and then it did a retest. This is an excellent place to sell as well. It's not exactly based on the false breakout as described in the beginning of this video, but when previous days, weeks, and months high and low get broken, and then later in the day get broken in the opposite direction, you usually get some nice big trends. Here's a textbook false breakout. Comes down to the previous day's low, and I love it when an area actually acts as support, and then later on when the breakout happens and it doesn't go down that much, notice also my Fibonacci profit target level there. I did a good job of predicting the low of this one. When it goes back above the previous day's low, you go long. Now in this case, it went from 73 all the way up to 93, so you should have made some money on there. Came back down and went sideways. You might have got long again right here. Usually when it comes back down, I give it an hour to two to go lower, and when it doesn't, I will buy it when it goes above the previous day's low right here. And in this case, it goes up a little bit, and I would have gotten stopped out with a loss. And usually when that happens, I kind of give it a little bit more time again to see if it and give it a chance to go lower. But when it doesn't, it comes back above the previous day's low again, you can see you had this explosive move. And again, look at the weekly pivot here. Resistance area once broken then becomes support. So anytime you get any kind of a retest like this, it's a pretty high probability trade to go long right there. You draw your fibs off the last wave, and you can see it went right to the 1.618 fib target. You know, different class, but I like to go over as much as possible in the classes. Australian yen, perfect example. Previous day's low, acts as support. When it breaks down right here, and then it retests it and goes back above it, you can see it went up from then on out. This is a perfect example of it. And again, it increases your odds when it acts as support and then breaks down underneath there. Traders that have bought right here aren't panicking. They're holding, you don't have a bunch of weak longs. Also keep in mind that the daily, weekly, monthly trend's up. That adds to the probability of this going up. And when it goes back above previous day's low, it takes off and goes up 120 pips.